Hi everyone, let's go over my medium time frame and low time frame bullish and bearish Elliott Wave scenarios on Bitcoin, starting with my new medium time frame bearish scenario where we're looking for a W, unfinished X, and then eventually a wave Y to the downside. And this one was also thought of by John because he shared this in the group this morning where he was like, well, we might still be in an expanding flat in this wave X and then a bigger W, X, and then a Y to the downside. So he had a potential A, B, C in then this wave X. And I've been looking into it and I actually do like that scenario, because is it going to be that easy that if people are buying over here and price would move towards the upside, that we are going to go for new highs locally above 31k? Well, what I think would be very nice actually instead is that if price would potentially move towards the upside, we still have a liquidity over here from a triple top at 30k. We have a very big resistance area around the golden pocket. These fibs are, by the way, taken from the high of W to the low of W in confluence with the point of control, and that is the point of control of this wave W. So that is a big resistance area over here as well, for then potentially the end of wave X and a continuation to the downside in a wave Y. Now, if we then look at wave X, we're then looking at a 3-3-5 expanding flat structure, which is a 3-3, and then you want to see a 5-wave move to the upside, which then is an impulsive structure. And that can actually bait quite a lot of people out, because if you see a 5-wave move, the first thing you're going to think about is potentially an impulsive structure in a potentially a wave 1, 2, and then a bigger 3 for higher prices. But people might then not be aware it's a wave C instead, which is a bearish impulsive structure, for then eventually more downside. Now, it is important for price to find support in this area over here. These fibs are taken from the low of W to the high of then wave A, in this being an A, B, C. And the most common target area for wave B is between the 1.236 and the 1.38 for an expanding flat, with the 1.618 being a rare target. Now, currently price is sitting right on top of the 1.38 over here, the 1.38 about 24.8k, and the 1.618 is sitting at 24.2k, which is a rare target for an expanding flat wave B. And if candles are going to close below this level, then for me an expanding flat is going to be invalidated. But in this scenario, you would expect then a move up and then eventually a move down. Triple top and point of control are important resistance areas. Also, in confluence with this channel that many people are looking at, I noticed online, it can be an interesting scenario to fake out the channels. So currently this channel is pulled from the high to then, let's see, from the high to this high to then the low over here. That's the pull of this channel. And you can see that so far it's been very nicely respected, right? Currently on our way to the downside. But with that scenario I just explained, if we move towards the upside, we're going to go above the channel trend line. And that's going to be interesting because you always have the channel traders that are the breakout traders that say, hey, we're breaking out of the channel, potentially a little bit of a back test, and then a move to the upside. They're entering stop loss in the channel, expecting a move towards the upside. But instead, it is a fake out of the channel for then a continuation to the downside, where then the low of the channel can act as support again. So that is very interesting indeed. Now, in the more bullish scenario, we are then looking for this to be a WX and then a wave Y. Now, the most common target for wave Y is between the 0.618 and the 1.236, which is a big area, and we are currently right inside this area as well. The 1-to-1 and the 1.236, however, is the most common target area, followed then by the 0.618, and a rare target is the 1.618. Now, the 1-to-1 is sitting at 23.7k, and the 1.236 is sitting at 22.6k, and the 0.618 has already been passed. It was sitting at 25.4k. So this is quite interesting. However, on the potential lower time frames, in a wave Y, it should be a 3-wave structure. So we then have a first structure potentially finished. Then this could be a second structure, and then an A, B, or a W, X, and then potentially a Y to the downside. If this is a Y to the downside, then you want to see a 3-3 and a 3-wave move. So you want to see a bit of a bounce and then continuation to the downside. In an ABC zigzag, it's a 5-3-5. But I don't really like a zigzag, to be honest, because if you have to count a 5-wave move over here, then we have overlap between the low of wave 1 and the high of wave 4, which is not what you want to see in an impulsive structure. So I prefer a WXY on the lower time frames. However, we can still have potentially a WXY like this. W to the downside in a 3-wave structure. So a W, then an A, B, C expanding flat, and then a wave Y to the downside. So again, an expanding flat, one of the potential scenarios where this structure over here is only the beginning. So this is a wave A, B, and then you expect a C. And the reason also in the group, like with a few people, we're like talking about it, is because if this is a wave W, this is already the high of a wave X, and then we're looking for a wave Y to the downside. This wave X over here is extremely short in time. Now, of course, that's not impossible, but it's even shorter than the 0.236. And actually, let me show you, grabbing the fib time over here from the high of X to the low of X, and then we double click over here. And then let me put everything on white, and then the 0.236 over here. And you will see that the high of this then wave X in a WX and then a Y to the downside is made before the 0.236, which is extremely short. Usually the wave combinations at least have some sort of a 3A2 time relationship minimum, but that is not the case in this particular scenario. But okay, it is still possible, and if price is going to continue towards the downside, of course a potential bounce in an ABC is going to be unlikely. If you pull the Fibonacci's from the low of the high of this wave X, then currently price is ranging in the most common target area for a potential wave B in a 3-3-5 wave structure to the upside, where then you expect eventually the double top to be taken. Now, it is going to be important what price is going to do more locally, as at the moment it is right on top of the yellow target box. We've been talking about this target box for a very long time, between 24,850 and 24.3k, and currently it's right on top of the target box, and it is actually finding support as it stands at the daily naked point of control. But at the exact same level, we also have a weekly naked point of control, and it has tested it now 3 times actually with 3 different candles. So the more you test the level, the weaker it becomes. So it is important for this particular scenario to see a bit of support and a move towards the upside. And of course, it is quite difficult to say, hey, what's preferred, what's eventually alternative, because in these medium time frame scenarios, both in the bullish and the bearish scenario, we are looking for potentially, of course, a bounce towards the upside. Now, in the more bearish scenario, we preferably want to see a bounce where we are right now, somewhere inside this yellow target box, because the 1.618 is a rare target for a B and then a C. And in the more bullish scenario, so this one over here, we have a bigger area. So if price is going to drop below the yellow target box, then potentially we are in this green wave Y, and we can find and potentially look for support down here. But I think preferably I would really enjoy seeing a move towards the upside, which has another reason, and I'll explain that now. Many people have been looking to buy inside this yellow target box, not because I'm a big content creator and we have a yellow box here, but just in general online, I've been seeing people eyeing this level over here. Now, in crypto, in trading, usually if many people are looking at the same area, what are the chances for that area to hold and then eventually, you know, new highs to be made at 31k? Another reason that I would like a scenario to have a bit of a bounce and then a continuation down is to bait out the people that are buying here in a move towards the upside, then eventually moving down, stopping everyone out, and then move potentially to a target box over here, so one lower, between 22.6k and 21.8k. So that is actually like my preferred scenario, something I would enjoy seeing, but in the end we have to wait what happens locally, as price of course dropped quite impulsively in the past, well, basically overnight for me in the Central East European time zone, and currently it is ranging right on top of this target box. And if we go to the lower time frame, then over here on the lower time frame, we then have that wave X, right? That is already finished in this particular scenario. So we then have a WX and then eventually a Y. And if we are in a wave Y, then the white one or the blue 1-to-1 and the blue 1.236 is an important target for then a WX and then a wave Y for potentially then a bounce in this area, which is between 24.5k and 23.8k. And then in white, you can see in white, these are the fibs taken from the high to the low of W to the high of X, is also a target area for wave Y. Both of these are below where price is at the moment, with then the white 1-to-1 being at 24.5k as well, and the white 1.236 at 24k. But as it is important to note, it's still these ones over here, the both of the 1-to-1s are still in the yellow target box as well. And what you also see is the channel on the lower time frames pulled from this high to these lows over here. And a corrective structure, a 3-wave corrective structure, or actually many corrective structures, also zigzags, WXYs, they tend to follow a channel pattern. And as you can see, also this one at the moment, very nicely respected, where over here you can see the channel has been hit. Now, of course, we might grind down the channel a little bit, maybe wick below sometime. But as long as the channel is respected, this is still very much a corrective structure for potentially then a move back to the upper side of the channel, right? That is basically how to trade a channel. But of course, then again, we are in an impulsive move to the downside, where if I go to the 15-minute, I want to show you something. So over here on the 15-minute on my chart, and it might now actually happen on other charts as well, this low over here has been taken, and then potentially a wave 1, 2, big 3 to the downside, ranging for a wave 5. We might actually go below these lows again, maybe come up, like, you know, be in a bit of a range for a wave 4, 1, 2, 3, 4, then eventually a 5 for then a bit of a retracement. But what is important, and what I've told in my Discord group as well, is the following. On my chart, this low has been taken, as mentioned, with this candle over here, and then once again over here. But if we go to the Bybit chart, which is not that one, that is this one over here, you can see that on the Bybit chart, this low has not yet been taken. So that is very interesting. And usually what you see is that price will eventually, on all the exchanges, take the same high or the same low. So therefore, I also still prefer to see a little bit more downside, so that on the Bybit chart, we're going to take this low as well. And actually the same happened very, very recently. Because if we move to the 1 hour, we had this over here. We had this low, and on my Coinbase chart over here, the low was not taken. This wick is above this one over here. So we still had this low to be taken on my Coinbase chart. But on the Bybit chart instead, you can see that this low over here was actually taken. If I pull it, there you go. So I was already looking for still a move towards the downside, and that's also the reason why in the update video last night I was saying, hey, I prefer to take this little low or a high up and then a move down to look for the double bottom we had on the Coinbase chart, not on the Bybit, because on Bybit this low was already taken, but on Coinbase we had a double bottom over here. And that is the same situation right now, where on Bybit, now this is the exchange and many other exchanges where this low has not yet been taken, but on the Coinbase chart the low already has been taken. So I still expect a little bit of downside. If we then have a look at the CVD chart over here, you can find the template and everything in my Discord, but also check out the end screen video. On the low time frames, we currently have, you could say, bullish divergences. However, the AGGR chart also did not yet take this low. So first of all, I don't like these bullish divergences, because on my Coinbase chart, this low has been taken, which would invalidate bullish divergences. But I also updated the silver members that if you have a big move towards the downside and you start to see bullish divergences, very, very often, based on probability and experience, these are leading divergences and not actual like bullish divergences. Because if you look at the blue line over here, price moving up, price moving down, and the blue line is just going down, down, down. So people may have entered over here thinking, hey, bullish divergences, but instead the lows might be taken, at least on Coinbase. That already happened, which invalidates the whole bullish CVD divergence scenario. So we actually talk a lot about CVD in that group. So yeah, therefore, very often after a big move, CVD is leading, and I would prefer always, before I trust CVD, I would prefer to see a little bit of a solid structure. So either a bit of a longer range happening, or a bit of a higher move, for example, with a couple of clear waves, and then the retracement and then the bullish divergences are going to be more trustworthy. But after such a big move on high volume here as well, with the high volume also in the candles here at the lows, I would prefer to see another move to the downside on lower volume, and then eventually a bit of a retracement, and then we'll take it from there. Finally, we have still some news today as well at 2:30 p.m. Central East European time. We have some high impact news. Of course, this week has been volatile already, so I don't know what this is going to do, but make sure that around 2:30 p.m. Central East European time, you're going to be trading safe with your stop loss, your take profit, your entry, and everything according to your personal plan. I hope this video was helpful or valuable to you. Please check out the memberships and the most recent educational video I've made about the best trading indicator you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'll see you at the next one. Bye bye.